Let's dive deeper into the action with the markets reporters at the close. Vildana, what are you watching?
I'm looking at small cap stocks. This week was a big week for the Russell 2000, up about 5% for the week, compared with the S&P 500's 1% gain. It's the biggest outperformance for small caps versus large since the presidential election in 2016, and we can see it in ETF flows as well. So if you take a look at this chart, it's IWM, that's the iShares Small Cap Fund. It tracks the Russell 2000. Investors have added about $4 billion to this fund so far this month, and it's the largest inflow since 2016. What investors say now is we'll have to see continued outperformance for small caps for this to truly mark a turnaround point for this space. Abigail?
Well, Vildana, perfect segue to this board, because this is IWN, the ETF, the value ETF for small caps. You were just taking a look at those big inflows, the most in many, many months, up 6.4%. This, of course, let's tie it into the rotation that folks are talking about this week, out of momentum into value. And here it is. We see that the momentum ETF down 2.4%. Again, value up 6.4%. Now, earlier this week, WALD, chief technical analyst over at Oppenheimer, he has an interesting take on this. He's saying it's not necessarily a rotation. He's actually saying that the move in value is very bullish for the markets overall. What we're looking at here in white, high momentum stocks and yellow, low momentum stocks, we see over the last few years, Taylor, they've been tracking roughly similar, but over the last 2 years, high momentum really doing much better than low momentum. There's this week's decline in high momentum. There's the surge in low momentum. So WALD is saying that this is more a move up for the low momentum stocks and a move down. And he would actually recommend buying the cyclical high momentum stocks because, again, the low momentum catch up is bullish for the market, Taylor.
Well, Abigail, for me, it is all about that big treasury sell-off that we are seeing. And it is the rate at which we got here, not necessarily the fact that we went from a 145 to a 190, but the fact that we've been doing it for 8 straight sessions alone. Going back, as you can see today, at least on the 10-year, we're up about 12 basis points. On the 30-year, we're up about 11 basis points. You now have a 10-year finally starting to flirt back up with a 2% yield. The 30-year starting to flirt back up, perhaps eyeing with a 2.50% yield. Based on, again, how quickly we have gotten to these levels. Both of those are some pretty key technical levels that we will be watching. What's interesting is if you come to my terminal here at GTV Go, yesterday we were talking about the record amount of bond inflows into high grade bonds. I'm taking a look at one ETF that tracks that. That is the TLT. It's sort of a longer duration bond fund. And as you can see, we had a record amount of shares outstanding. We've come off of that a little bit today, but still very, very much close to a record. I think this really highlights the divergence that we're seeing. Clearly not a classic risk off trade with flows into equities flowing out of bonds, because you're still seeing a little bit of demand for that. So again, showing a little bit of difference that we're seeing today in the market.